I've been a DCA bot trader since 2019, and I know how to make great DCA bots that have consistent profits day in and day out. But the reality is that a lot of you are making some terrible mistakes. And I'm going to be sharing the top 3 worst things you can do to destroy your performance for running a DCA bot. And I'll explain why this setting right here, which is free, I'm going to share this with you in a second, why this is the best. All right, first thing. A lot of you think that more DCA orders are best. I've seen some templates that you can copy on various websites or exchanges that have up to like 10 or more DCA orders. These SOs are safety orders or DCA orders. Please hear me out. More is never better. When you have more DCA orders, it may look amazing to have all of these orders buying all the way down. It looks incredible, doesn't it? But when you look at the hard facts, yes, you're making a lot of trading activity right here. It's pretty insane. You're opening and closing at least 2.2 trades per day on average. But here's the reality of DCA bot trading. The majority of your positions will close with your first order, your base order, your entry order. If you think about our total trades here, 1,300 of these trades were closed with the first order. Why is that a big deal? Well, it all has to come down to how much money you're putting into it. Here in the settings of this strategy, we're using a total possible capital of $1,000. This is mathematically going to give us the amount that we need. So if we're using $1,000 and we have 10 DCA orders and we're going to be doubling down for each order, we have to start with just $1, which means that 1,327 trades closed with a meager $1 used. And the take profit target is just 1%. 1,327 pennies. Doesn't look so great now, does it? When you actually look at the performance here, this is the DCA bot performance that looks gorgeous on the chart because all of these buys and sells, right? Again, how many trades it says here? 3,100. Right here it says 5,000. Don't worry, it's a discrepancy between how TradingView counts trades and our strategy does. This is the reality. For all of this work, for all of this volume that's generated, which is an insane amount of volume, you only walk away with 8% profit. Look at how pitiful that is. Is it going up and to the right? You know what it is? I have to give you that. Like, good job. You're making money, I guess. But at this point, you're just paying to run a bot. This isn't profitable. This one is profitable. This bot with far fewer safety trades has earned 80%, 10 times the amount of this one. So ladies and gents, trust me, more DCA orders is not the solution to better profits. The other pitfall that other people use when they're setting up their bots is that they don't double down. DCA does not mean that you have to use a double down martingale strategy, but when you do, it really works well. So here's the idea. When you look at a DCA strategy, dollar cost averaging, it means that you're buying more as the price goes lower. Here's our base order. Here's our safety order. Here's our safety order 2, or DCA 1, DCA 2. Now, while you can still get decent results, this specific strategy earned 63%. The unfortunate truth about this is in the total trades here, it says 282. So is it profitable? Yeah. Are you doing okay? Yeah. But look, out of 282 total trades, 212 of them closed with the smallest amount possible. Because when you do not use proper DCA, which would mean your base order or your original order is 1, then DCA 1 should equal 2. No. Oh, I got my Japanese keyboard turned on. Isn't that fun? Here we go. It should equal 2. DCA 2 should equal 4, etc., etc., etc. If we have 3, then it should equal 8. Okay? This is the reality of DCA style trading. If you are doing it otherwise, you are solely missing out. Because if you make all of these equal while you're still making profit, you are missing out on two big things. One, you're missing out on more profit, 63% versus our 80%. And two, you'll notice that the total closed trades is vastly lower. That's another thing. 1,000 total closed trades with 80% profit versus 280 trades with 63% profit. You'll also notice a huge shift here and a huge difference in this max bars per deal. This is where the magic of DCA happens. By doubling down on every single order, you're actually able to reduce the time that you're waiting between trades. 11,561 bars. This is the 30-minute time frame. Do you know how long that is? Because I don't even know how long that is. We're going to go back over here just to measure it out. 11,000. I have to zoom out so much. We have to just keep going. There we go. I'm just going to see what this number is because that's 5,387 bars. So 2 times this, it doesn't even give me the number. It doesn't even show me how many days because it goes too far in the future. Where is the number? 11,000 bars is going to be something like 6 months, maybe, max. So you're waiting 6 months to make some money. Whereas with 2,000 bars, which we could easily measure out, that's not going to be as much time. So 2,000 bars from about here to, let's go a little bit further. 2,300 bars. Oh, it's not giving me the date range. Usually it does. Trading View, come on. Okay, I have to move this over then apparently. So December 18th over here starting October 31st. So 2 months. So if 2,400 bars is 2 months, you don't want to know how long this is. This is the real talk, guys. You are not going to be making as much money when you are not doubling down with a DCA strategy. That's the other thing you have to know. While it looks like you're making money, the reality is that you aren't making as many trades. If you were to start a bot right away, you're going to be waiting way more than you are going to be creating and opening and closing new trades over and over and over with this strategy that I've already created. The third pitfall that people make a common mistake of is that they have an extremely high take profit target. This bot is using the same signals as the original one that works really, really well, but it has a take profit percentage of 5%. Now, Aaron, are you kidding me? 5%, that's really going to make or break a bot? Well, let's see. It made 63%, really similar to this bot, but look at the number of total closed trades. It's even less. From January 2024 to December 9th, 2025, it only made 110 trades. So you could argue, well, that means that you're more efficient in your bot and you're not paying as much in fees. Are you kidding me? If I started a position now, the price has to move up 5% to close it in profit. Like, this is dumb. It is not efficient capital. You don't want to have a super high take profit target, nor do you want to ignore martingale double down strategies. If you're just going to be putting the same amount for $1,000, $250, $250, $250, $250, you're not going to be making as much profit. If you're going to put down some crazy amount of DCA levels, this is inefficient capital usage, knowing that over a third of your time, you're only going to be making 1 penny per trade. So what's the deal? Why does this work so well? I told you at the beginning of the video, you don't remember. I've been doing this since 2019. I've been DCA bot trading in bull and bear markets. And I actually shared this template and this trading view strategy with people in the Better Traders Club at the Better Traders. So if you want access to this, you need to go to thebettertraders.com and check out the club, because every single month I share DCA bot templates, which is exactly what this is for Bitcoin Cash. Don't worry, I'm going to show you the settings in just a second. But the beautiful part about being in the club is that I give you curated DCA bot strategy settings for every single month, at least 2 per pair and about 5 pairs a month. The idea is to show you how I have learned how to take advantage of up and down price action to get some amazing profit performance. Again, 80%, not too shabby, especially knowing all the chop that's happened. So let's go back into the settings for this bot. So when you join the Better Traders Club, you get access to the DCA backtester. I use the Pro version here because it has a bunch of information in this floating window that the regular one doesn't have. Sorry. So this is a hypothetical bot. If you had $1,500, then you want to use the double down strategy that I shared before. So it's $100, $200, $400, $800. If you add all that together, it equals $1,500 because it's doubling down every single time. What I'm using for a trigger to start the bot is essentially an as soon as possible deal start condition or a trigger. But we could also use RSI. For instance, whenever RSI with the length of 7 is below 85, start a trade. You could do that with a trading view alert. You would have to add the relative strength index to a chart like this. And then you want to choose RSI with a length of 7. I'm going to go ahead and put this over here at 85 so that way you can see this. So whenever RSI on this time frame is below this value, then it's going 85, then it's going to start a new trade. So when it's super overbought, it's not going to buy or it's not going to start a new trade. That's what that means. Going back over here to my inputs, I have this set to a 1% take profit target. Coming down here, I'm using 3 safety trades or 3 DCA orders. This is outside of the base order or the entry order. So we have entry, DCA 1, 2, 3. I'm using a price deviation to open this bot basically with 4.5%. What does that mean? It means that this first safety order right here, if I measure it from the entry right here all the way down here, it's 4.5% on the nose. Now, keep in mind that this is not going to be perfectly 4.5, 4.5, 4.5, 4.5. It's going to be exponentially getting larger for every single order. It's also doubling down, not just in price action, but also it's doubling down in terms of the safety order deviation or the DCA deviation. Okay? So the final one is going to be 31.5. So it's 4.5, 13, 15 or so, and then 31.5. The last thing to look at here is that we're using a safety order volume scale and step scale of 2, which means that we're doubling down. We're not just doubling down in price, buying 2 times as much as it goes lower and lower and lower. We're also adding 2 times, we're basically increasing the spread, the DCA spread, like I just shared here. These are the settings that you can use, and you can run it either on Altrady, you could run it on BYDFi, because BYDFi has a spot DCA bot that you can create. So you can actually set this up on your own BYDFi account, but make sure to use the link to sign up for that down below. So that way you can accumulate some good rewards for trading. Plus there's also an exchange offer from Weex, where if you deposit 100 USDT, you also get 50 USDT back. The main thing you need to know is that I've been doing this a long time. I've been teaching people how to do this a long time. I'm not messing around. So again, to recap, you want to be careful that you do not use too many DCA orders. It's all about capital efficiency. The second main mistake that people use or do is that they don't double down. You have to double down if you want to make a lot of money and if you want to average down your entry on every single DCA order. And third, having a take profit target that's way too high, unrealistically high, you need to have something that's more realistic. The idea, the goal of your bot should be to churn out gains over and over. You want your bot to create a lot of profit over and over and over, not waiting for 6 months for a position to close. If this video has helped you, awesome. Leave a like, subscribe. Let me know what you learned down below. But before you go, you're going to watch this video because this is also going to help you become a better trader right away. Watch this video. Until the next time, you know what to do. Stay awesome and stay in the green. Peace.